Hi everyone, my name is Soni and welcome to another Elliott Wave Traders Classroom lesson. If you want to learn more about Traders Classroom and get 3 lessons a week, check out the links below the video. Let's get started. In today's lesson, I want to discuss some of the key characteristics when deciding between corrective price action and impulsive price action. There are some things that I do think you need to know. Not only will it help you decide which pattern is unfolding, but it also keep you on the right side of the trend and stop you forcing a bias. So I want to go through some price action on a token called Soni, and there are a number of patterns that I want to highlight, and I'm going to show you the internals of those patterns, but I wanted to just elaborate on why I chose a specific pattern, and it was essentially based on the characteristics of the price action. And that basically steered me into suggesting a particular pattern. So the first section of price action that I want to highlight and look at in more detail is this move here from 37.89 into 62.50. And whenever I'm looking at price action and evaluating a section of price action, one of the things I like to look for is, am I seeing overlapping price action? Because that will rule out a number of ideas, or at least suggest a certain number of ideas as well. So it will give me a direction where I need to be looking at. So if I'm seeing overlapping price action, then the chances are it's not an impulse. And furthermore, if I can count either 3 or 7 swings, it will then add more credence to the idea that a correction is unfolding. So if you look at this price action from 37.89 into 62.50, you can clearly see that it's got overlapping price action. So initially, I'm looking at this section of price action as a corrective structure based on the overlapping price action. And then as I started to dig into the structure of the move from 37.89 into 62.50, I noticed that it was clearly showing 7 swings. I didn't even need to force the move as a 7-swing move. It's standing out as a 7-swing move. And generally speaking, when something is obvious, it's probably a good idea to go with the more obvious pattern. So in this case, I've got overlapping price action. I've got a 7-swing move. Chances are it's a double zigzag and a corrective pattern. And furthermore, you can also see that it's contained by parallel lines. So that's further adding credence to the idea that this is a corrective structure. But the 7-swing move rules out, or it's suggesting that it's a double zigzag as opposed to a zigzag, as a zigzag is a 3-wave move, double zigzag is a 7-swing move. So not only have I established what I think is likely unfolding, i.e. a double zigzag, by first the corrective looking price action, the overlapping waves, the actual number of waves is highlighting that it's likely a double zigzag, as a double zigzag is a 7-swing move, whereas a zigzag is a 3-swing move. Now, if you saw overlapping price action, but in 5 waves and took the form of a wedge-like pattern, then you would be looking at possibly a diagonal, either a leading or ending diagonal. But because we've got overlapping price action, but in 7 swings, it's suggesting that it's a corrective pattern. So I'm already isolated one particular pattern of interest just by looking at some characteristics of the price action, i.e. overlapping price action, it's contained by parallel lines, and I've got 7 swings. So a 7-swing move likely suggests a double zigzag. Now let me just show you the internals of that move from 37.89 into 62.50, and just show you in detail, just to show you how I labeled that. But my initial reaction was, okay, I think this is double zigzag, but let's now look at the internals of the structure to see if we can label it as a double zigzag. So 535 for wave W, followed by an X wave, and then 535 for wave Y. So two zigzags back to back with a correction for an X wave. So 5, 3, 5. So leading diagonal, ending diagonal. So A and C are 5-wave moves. X wave, which is a zigzag, and then we need another zigzag for wave Y. So A, B, C, so 5, 3, 5. So you can clearly see we got 1, 2, 3, 4, 5, 6, 7, 7 swing move, which suggests that a double zigzag has unfolded. A lot of the times you'll see the end of the pattern coincide with the upper or lower boundary of the corrective price channel. So in this case, pretty much hit the upper boundary of the corrective price channel. Didn't get as close as I thought it might do towards the quality projection target between waves Y and W. But a lot of the times you will see that target tested as well, and that coincide with a test of the upper or lower boundary of the corrective price channel. The end of the correction will coincide with or on and around the equality projection. So in the case of a zigzag, C equals A. In case of a double zigzag, Y equals W. So a couple of things you can look for, but it's really about structure as well. First and foremost, I'm looking at structure. So if I can counter a completed pattern, then I'm going to be looking for evidence of reversal. And I like to look for a 5-wave move in the opposite direction. That's just something that I've found very successful. So whenever I'm suggesting a pattern is complete, I'm looking for a 5-wave move in the opposite direction. And having established, or once you can suggest a pattern is complete, if you get a 5-wave move in the opposite direction, you then have something to work with. So in this case, if I'm looking at opportunity here, I'm looking at possibly a bearish opportunity for further downside. So what I'll be looking for is a 5-wave decline, and then you sell the 3-wave rally, and your stop is at 62.50. This is simple Elliott, 5-wave reversal, clue, 3-wave rally. You know you're wrong, which is the origin of the 5-wave decline, which in this case is 62.50. So that's your opportunity based on you've established that this is a corrective pattern. You've now seen evidence of a reversal, 5-wave decline. This decline is larger than any of the previous declines. So the decline for wave 2, wave 4, and 6. This is considerably larger than any of those moves. And you've also taken out 0.6, which is the B wave of the second zigzag. So that's the last swing low. So further evidence to argue of a trend reversal. So once you've established that, then you can then act on that and develop a trading plan around that, which is, like I say, selling the second wave, bounce, or the retracement, and then sticking a stop, in this case at 62.50. The expectation would be for a continuation to the downside, and most likely an impulse. And that is what unfolded. And so the next piece of price action I want to focus on, or the next section that I think is useful, particularly as it's clearly different to what we saw from 37.89 into 62.50. So whereas this is a correction, this is an impulse. And the reason being is that you can clearly see there's 5 waves, 1, 2, 3, 4, 5. And in this case, I think the third wave is the longest section between waves 1, 3, and 5. And that's a classic form of an impulse. Occasionally you will see the 5th wave or the first wave end up being the extended wave. But for the most part, if you're looking for an impulse, you're looking for the longest section to be the third wave. Or if you see a section of price action that looks extended, that's probably a good starting point to suggest that it's part of way through or all of way through, or it's the third wave of an impulse. That's a good sign to suggest maybe that's part of a developing impulse. And whereas you've got overlapping price action in this move from 37.89 into 62.50, you can clearly see that you don't have that type of price action. So that is a characteristic of an impulse, whereas this price action is corrective. So very different type of price action. So just by understanding that keeps us on the right side of the trend. We don't want to be bulls in a downtrend, particularly if an impulse is unfolding. And likewise, having an understanding of what what is unfolding, we could then try and build a trading plan around it, i.e. after the completion of this double zigzag, we can start to look for entries to sell the market for an expectation to the downside. So if we're suggesting that an impulse is unfolding, then we want to be trying to ride the trend as far as we can, i.e. until the completion of a 5-wave move. We'll get majority of the move if we're entering a position. And then once we think the 5th wave is close to completion, we can then start to look at exit points. So Elliott is offering entry and exit points. Your entry point is, in this case, selling the 2nd wave, sticking a stop at 62.50. And if you just happen to have rode the trend down in what you suspect was developed impulse, and upon the completion of a 5-wave move, or very close to completing a 5-wave move, then we can start to look at exit points, possibly where wave 5 equals the distance of wave 1. Or if we can see a clear 5-wave move for the 5th wave of the impulse, then we can start looking to exit the position. Because after the completion of a 5-wave move, Elliott is suggesting we're going to see at least a correction in 3 waves, which is pretty much what you got from 25 cents. So I'm going to focus on this move now from 25 cents into 41.89. So what you got, corrective structure, so 7-swing move, 5-wave decline, so that's an impulse, and then this could unfold as a 7-swing or a 3-swing move. In this case, it unfolded as a 3-swing move, so that's going to label it as a zigzag. So let me just show you the internals of that correction. So if you're looking for evidence of a reversal, so if you want to suggest that in this case, the impulse is complete at 25 cents, then this 5-wave advance in the opposite direction is your first clue to arguing that the impulse is done, or a 5-wave decline is done. We're likely to see further upside, be it zigzag, double zigzag, or some sort of correction to at least correct that 5-wave decline. But as and when we get further price action, we'll then be able to establish or what correction is unfolding. So if we start to see 5-wave rallies, then it's likely hinting that it's wave A of a zigzag, as opposed to a 3-wave move, which suggests maybe it's wave W of a double zigzag, or wave A of a flat. So just that bit from 25 cents, that 5-wave move is eliminated a number of patterns because it's hinting at a zigzag. Zigzag. Wave A is a 5-wave move, so 535. So again, characteristics of the pattern. What's the price action telling you? Is it a 3-wave move? Is it a 5-wave move? If it's a 3-wave move, likely leaning towards wave A of a flat, wave W of a double zigzag. If it's a 5-wave move, as is the case from 25 cents, suggesting wave A of a zigzag. So having understood that bit, so we've got a 5-wave move, we can then say, okay, I need waves B and I need waves B and C before I can start suggesting a completed correction. So what we got is a 5-wave move followed by a 3-wave pullback, so waves A and B, and then we'd be looking for another 5-wave move to complete the 3rd section, so up, down, up sequence for a zigzag, if that's what we suspect is unfolding. Wave C can take the form of either an impulse or a diagonal, ending diagonal, and in this case it likely unfolded or appears to have unfolded as an ending diagonal. So once you've got the pieces in place, then you can go about using that price action and then developing a trading plan. So upon the completion of a 535 pattern for what I think is a zigzag, so that's correcting this decline from 62.50 into 25 cents, you could then start to look at another entry. So your initial entry was to sell, so that Elliott's give us an entry point there, stop at 62.50. Elliott has given us an exit point. Either you can start to scale out towards the end of a 5th wave or wait for a 5-wave reversal. If you see that type of price action, you need to get out because it's telling you that 5 waves are done. That's your exit. And then you can start to look at this price action and then whether or not it's decided if it's a more complex pattern, double zigzag. In this case, it's a more simpler zigzag. So it's just simple 535. Just pushed above the equality projection where C equals A. So that's a nice target area. And you can also see that it's got rejected at the upper boundary of the corrective price channel. So that's a classic area where you'd expect a reversal on around the equality projection, as well as in this case, upper boundary of the corrective price channel. So once you start to see some evidence of a reversal, such as a break of the way forward stream, you can then start to consider maybe selling a bounce. In this case, if you think the diagonal is complete, you'd stick a stop at 41.89, low risk entry at your entry point, and you can start to look lower. In this case, you've got another 5-wave decline into 27.13, smaller than the prior 5-wave decline, but again, you're still seeing 5-wave declines, 3-wave rallies, or corrective bounces. That's the definition of a trend. So as long as you're seeing 5 waves in a particular direction and corrective pullbacks or bounces, then you can stick with the trend until the trend starts to bend. So the only way you're going to know that is if you start to see 5-wave moves in the opposite direction. Well, that's when you start to take note and maybe consider reversing your bias. But in this case, in Sonic, over the last few months, I've been seeing corrective upside, 5-wave declines, corrective upside, 5-wave declines. You've seen corrective upside, 5-wave decline, corrective upside, 5-wave decline. And this recent price action from 27.13 into this high at 35.89 appears corrective as well. So going back to what we've discussed, this price action here on 37.89 into 62.50, just by understanding the characteristics of what I think, well, it did unfold as a double zigzag, because obviously it pretty much did what I expected it to do, where I expected it to do after the completion of the pattern. So if you look at this price action from 27.13 into 37.89, you can see it kind of looks similar. So looking at this price action, what have we got? Are we seeing 3, 5, or 7 swing moves? Are we seeing overlapping price action? Is it contained by parallel lines? How many swings do we have? These are all things that you can look at. And once you've established some of these key characteristics, it will likely then point you into a direction and the likely outcome of the next move. And having an understanding of what you expect based on what you're seeing, so you're counting what you're seeing, you can then build a trading plan around that and then look to potentially get into the market. Thanks again for tuning into the live stream. If you want to learn more, check out the links below the video or go to elliottwave.com. Hi everyone, my name is Soni and welcome to another Elliott Wave Traders Classroom lesson. If you want to learn more about Traders Classroom and get 3 lessons a week, check out the links below the video. Let's get started. In today's lesson, I want to discuss some of the key characteristics when deciding between corrective price action and impulsive price action. As well as some things that I do think you need to know. Not only will it help you decide which pattern is unfolding, but it also keep you on the right side of